Let me address that in a second, but actually let me address that right now. I hired this camera crew here because I thought it would be I'm at that stage in my life where I don't have anything to prove to anybody except to myself. And I've more and more decided that I want to record what it is that I do, because I feel that there needs to be an antidote to the endless stream of outcome-orientated YouTube videos and education that focus on what watch I am wearing, or what car I am driving, or what boat that I am sailing, or what class on the planes I am, or if I got my own private plane. And it seems to me that we are currently educating a generation of want-to-be traders where we put the cart before the horse. We are all, or they are all, focused on the end result of a glamorous trading career, and yet they deliver absolutely nothing in terms of content or new thinking. And I wanted to record what it is that I say, because I feel that it's so important from my own integrity point of view that someone stands up and says, hang on, everybody focus on technical analysis. But if technical analysis was the be-all, end-all of successful trading, how come 80–90% of all traders lose money? Is it because they are illiterate and they can't pick up a book on technical analysis? Hardly. Some of you, I am sure, have esteemed careers in other endeavors, whatever it may be, dentist, accountancy, doctors, lawyers, whatever it may be. But then you come into this business and you think that you can replicate the skill set that got to where you are in your chosen career. But unfortunately, this endeavor is very different to other endeavors, in that it is not so much what you know about the markets, but how you think when you are trading. And I feel that there's no emphasis on that. That's why I wanted recorded. So to answer your question, yes, I want to give you that recording. And that takes me to the next step, which I would like to start off with. And we're together for 3 years, ladies and gentlemen. So it's 3 hours, ladies and gentlemen. Possibly longer. Possibly longer. But we'll stick to 3 hours for now, shall we? And I have brought with me a PowerPoint presentation to illustrate some of the points that I want to get across to you, plus I want to trade live. And it is not the most ideal of setups. So, first thing I want to say to you is that we got a camera crew here, and he's filming on me, he's recording me here. That's great. We're also recording the screen, so that if you miss some of the finer points that I will espouse during the next 3 years, 3 hours, well, then you'll get a recording of me. But I don't know who you are, which leads me to the second point that I want to make. And we'll get to the previous slide in a moment. I have an agenda for today, and that agenda roughly goes, I want to say thank you in a moment. Then and this is entirely voluntary, of course, ladies and gentlemen, entirely voluntary. But I have created some surveys that I thought could be fun. Things where I ask you questions about your behavior, but not what you individually do, but what you think other people are doing. Not you personally, but what do you think is the most important thing about trading? Is it technical? Is it mental, psychological, behavioral, etc.? And the reason why I created those surveys was simply just that we could fill them out online, and then we can see the result right here using a feature in Telegram. Now, as I said, it is of course entirely voluntary whether you want to do it or not. And if you decide to participate in it, I want to guarantee something to you right here, is it is entirely anonymous. I'd like to give a mention to Trade Nation, who have sponsored the event and the IX show. I think it's fantastic. that there are people who will put together events like this, and I think it's very commendable that Trade Nation's actually supporting it, so that there is a forum where people who are sincere in their quest to make trading somewhere they can make money a possibility. I think we have covered this one here. I think all of us that want to be part of the group are now part of the group. Here's the agenda today. The agenda is I want to trade live. That does unfortunately mean that I have to swap over because I only got one screen, and we'll do our very best. But I also want to take you through an example of a trade that I did, and I'll explain to you why in a moment. We want to do live trading, and then we want to do the setups so that you know what it is that I am looking for, so that you may take that away and replicate it at the comfort of your own home. So I want to start off by saying thank you. I want to say thank you to you for wanting to be here, coming from wherever you are in the UK or beyond to hear me speak. It's a real honor, and I don't take that lightly. I find it incredibly flattering that anyone would want to come and hear someone speak, because I'm not selling anything. And for people not selling anything, oh, hang on, what's the catch here? He must be selling something. But no, generally I am not. But on the other hand, I also want to thank myself, because it's bloody expensive for me to do a talk like this, because there's about 20 people of you, and I have to split the entrance fee, so I'll probably make £1,800 from this. And considering my flight was £2,500, hotel, train, and plus that I'm losing out on a fantastic trading morning, you can see how this quickly adds up. But on the flip side here is also that trading to me is something where it's an incredibly personal endeavor, but I also think that I have something that is worthwhile listening to, as opposed to the lots and lots of rubbish that I am seeing out there. So I also see it as my it's a moral imperative to get out there and away from the screen every now and again. Look, this is how things are really working, and this is how you can make a success of this. But the most of the thank you goes to you. We've covered the Telegram, at which point we're leading on. I want to start off with some thoughts on trading teachers and trends and your journey. But as I sat in the taxi to the venue, I thought to myself, perhaps it would be a better idea that I went through some of the trading setups that we will be looking for today. What is it that I would like to find today so that I can trade it? That means that I'll be jumping from this slide 7. What I would like to do, ladies and gentlemen, is to go through the last 10 days of the FTSE 100 index at a time frame that is applicable to us right here, right now, so that you will get a sense of what is it that I am looking for. What setups are we particularly looking for that we could trade today, should the setup appear? Now, there is an excuse section. I laughed at myself for having an excuse section, because I'm always that kind of, hey, you live and die by the sword, and you don't need to make apologies or excuses. However, I will say this, I guess from the point of view of where you are, is that when I sit and trade, that whole notion that you're sat on a beach trading is probably one of the biggest crimes that I've ever done and perpetrated to the trading industry, because the mere fact that I'm sat with sand up my cravat and I'm sort of trying to get comfortable, and how am I going to get a good decent Wi-Fi on a beach, and how am I going to navigate this glare of the sun so that I can see what's actually going on on the screen? It's just idiocy. When you truly think it through, it's idiocy to think that I can sit and make really good, sound trading decisions while the waves are rolling in and this 34 D's, G, F, or however big her bosom is prancing by, ogling for my attention, what's more important, big tits or Dax? I'm sorry guys, but Dax you might just miss out. So I trade, and I truly, generally trade with an intense focus and concentration. And it's not quite the same for me to sit here getting your attention and maintaining your focus and attention for 3 hours, keeping an eye on what's going on in the DAX and the FTSE, which we'll be trading, as well as educating you something meaningful that you can take away, which is another reason why I hired the film crew, because I'm thinking we'll edit this together and then we can also sit and watch it afterwards, and we may edit out the TITS bit, But nevertheless, here goes. We're going to go through 10 days. I want you to know what I am looking for. Okay? We're getting into the thick of it immediately. I want you to know what am I looking for. So here's a clean chart. By the way, take pictures all you want, but why don't I just send you this PowerPoint to the group? Of course. If it's here, it's yours. Okay? It's not like I'm not keeping anything away. Here's a clean chart. The time frame, did you ask what time frame is? So what you're seeing here is the FTSE index, and it's on a 10-minute chart. And the reason why I've chosen a 10-minute chart, it's not my preferred time frame. My preferred time frame is 5 minutes. But I thought that by using a 10-minute for the purpose of today serves 2 benefits. 1, it gives us a bit more thinking time. Not the most ideal entries, but it gives us more thinking time. Secondly, it also decreases the pace by which we are trading. And it gives you a bit safer signals. Maybe not as big as profit potential, but safer signals. Are you part of this? Have you paid to be here?
Oh, sorry, no.
Then out you go.
Sorry.
I might be a really generous guy, but I don't fuck about. How many of you in here witness me trade on a daily basis, just out of curiosity? Okay, so there's a fair few of you. Something that puzzles people is, how can you make a living as you do just selling double tops? Well, I'm doing pretty well from that. This is my turf. What you're seeing down here is, I'll illustrate it here. This box that you're seeing here, could you please, you'll see them on every single chart. Please ignore it. It is part of a research project that I'm currently undertaking where I want to ascertain how to trade the FTSE most efficiently in the early morning hours. It technically has got nothing to do with what we're achieving today, but it just happens to be that those charts fitted well into what I wanted to show you. And by the way, if I come up with something magic, don't worry, I'm a sharing kind of guy anyway, so you will hear about it eventually. But for today, that box that you're seeing on every single chart that you'll be seeing is not relevant to what we're doing. So, the first point here is that you have got a clear sell double top. Now, say that you are addressing the market from the point of view where you wait for every single 10-minute bar to close. How would you feel about a bar? How would you feel about a bar that makes a double top and then closes past the halfway line? From my point of view, I'm going to think, I'm going to have to find a place to sell short. If I see a market make a double top And that bar had it closed up here, near the height of the bar. I would be thinking, some strength in there. They're pushing it up and they're maintaining the bid of the market. But here, it seems to me as that the moment we got above the prior high, which we're seeing over here, sellers immediately came in and we closed somewhere below the middle. It's not that I have this rule that says it's the halfway line, bang. It's more like I'm reading the market going, there's not a lot of buyers, are there? That kind of sentiment. See, this is how I prefer to educate. You can see. Can't see nothing. You just have to deal with what is right here, right now. And that is much more realistic. You see, the way your eyes are put together is they will go, oh yeah, if I did sell short there, because they will look to confirm that preconceived notion that you are going about. Why? Because your mind has two primary objectives, which is for your whole existence. It is to avoid pain is one of them. And second one being connecting this moment with a past moment so that you can draw experiences, which is a dangerous thing to do when we're trading. But let's stick to what we call metastasis. The maintaining life is the primary objective of our body, and mine is to avoid pain, because pain means threat. But we don't live in a time where a big ass dinosaur, maybe not, but a bad animal that wanted to take our life. We don't have that risk anymore, where it's, we're going to fight this fucker, or we're going to run the hell out of town. It might be our boss that we're running away from now, but right now, we don't have the same threats, but our mind has just not developed. So that if I show you the entirety and you confirming, well, this is a winning trade, I'm gonna stick to that. I have now, as a teacher, done you a disfavor. And during this live trading, we won't have that benefit, which is why I want to do live trading, even though I might fall flat on my arse. But so what? At least it's real. It's what we all have to deal with every single day, every single 10-minute bar that we experience during the trading day. That's the reality of it. So when you're confronted with this, what are you going to do right now? And what I want to get across to you is that this is the way to trade. The way to trade is not to see the whole picture, but to see them bar by bar. And begin to get a much greater discernment of where do I want to enter and where would my stop loss be. And I've developed this, call it an entry technique, where I'm saying, hey, if I see something like that, I will attempt to sell short right here or at some point in this area, and I'll simply have a stop loss right above it. I don't need a stop loss up here onto the ceiling. Because if my thesis is right, I'm going to be able to sell short here with a stop loss a tick or two above here. And if I'm right, it should be a decent trade. I might have to sit and wait for 5, 6, 7, 8 bars. But if I'm wrong, this market will prove itself against me by moving up above this prior high. But I nevertheless wanted to take you through the PowerPoint so that you get a sense of what it is that I am sitting looking at when I'm back there in the mansion, the castle that I apparently live in with a jet private parked outside. So okay, this is what I'm looking for. I would have ideally liked to have sold short up here, and maybe had I sold short down here, I would have had to go, ooh, it moves against me. Bar number 2. What's significant about bar number 2 is that it closes below the low of a prior bar. So, from my point of view, that is an immensely critical distinction. What is the highest bar on this chart? Ladies and gentlemen, I'm just gonna get a laser point. 1 second. Yeah, that's the fuck I'm not going, getting all day is that you sit in restaurants and you go, why do they make these menus so small? I hate it. Okay, do you all see the laser pointer on the wall? Good, okay. Do you also see it here? Yeah. Good. I know that the cameraman doesn't, but hey, that's what I got this laser pointer here on the PowerPoint itself. What is the highest bar on this particular chart? The answer is this bar here. Can we agree on that, ladies and gentlemen? Yeah, we all agree on that. Now, in my vast experience of trading is that if the highest bar that I can observe or the inside bar that comes straight after, if the market closes below the low of the prior bar, and ideally if it had closed below this bar here, which it practically does, that is a sell signal. So you will often find, whenever I am on Telegram, if you follow me there, that you may not be mindful of that. But if you go back and check, you will see an enormous amount of times whereby the buy signals or the sell signals comes exactly when the clock turns 5 minutes past, or 10 minutes past, or 15 minutes past, what I call the round numbers. Now, you may not know why the hell I'm doing that, but I'm telling you right here, right now, it is because I am very frequently waiting for the bars to close before I get that. Now I know I need to be on the lookout for a buy signal or sell signal. Oftentimes what happens then is, if I get a signal to say sell short or buy, then I'll take a deep breath and just see, hey, you know what, I'm a sucker for a bargain. So if I have to sell short at 46, let's see if I can just sell a short at 47 or 48, because then I'll score myself an extra 2 ticks. Do you follow me here? That, you know, sometimes you get the sell signal, but you think, I'm just gonna hold set. Just hold off for a second. Now, a friend of mine says, don't be such a dick for a tick. Yeah, he's like, because sometimes, because you're so overtly smart, you're just waiting for that slightly better price, you actually missed all the action altogether. So I'm sure that if you, and I'm just telling myself this, but I'm sure if you took all my trades in my career, and all of the times that I have missed out because I was a little bit too smart. What is it you Brits say, that what you gain in the something you lose in something else, something carousel in the...
Swings and roundabouts.
That's the one, swings and roundabouts. Thank you so much. So point number 2 here is crucial to me because it closes below the low of the prior bar. Now, hold that thought for a second. Let's swap over to a real market right now. This is not a demo account, okay? This is right here, right now. A real account, money in it, 92,000, okay? Here's the DAX. This is on a 5-minute bar. What is the highest bar on that particular chart? Oh, okay. I guess this is a stupid question to ask because you're like, well, what am I supposed to say, Tom? Am I supposed to point at it, or am I supposed to telepathically tell you what it is? Or am I supposed to just say that one there and then we all know what it is? The answer, of course, is it's this bar here, yeah? That one right here. I'm going to put the cursor over there so the cameraman can see it as well. Yeah? It's this one right there. Right there. That's the highest bar. Okay. At what point do we close below the highest bar? It's that bar there that comes 2 bars after. Can you all see that? Yes. Okay? If you can't, let me just make it a little bigger. Okay? Now, I happen to trade with a company called TV365.com because I think that you can't find any broker on God's green earth that has as tight spreads and as fair as they are. But one of the things I often hear when I say to people, I I trade with TD365, they said, that's kind of shit charging package. And I said, well, fortunately for me, I don't really need much. I'm a professional trader, and all I bloody need is this. That's all I need. Because it's not the charging package that will make you a good trader. That I assure you. I'm sure there's plenty of charging packages in the world that will promise you the world, this, that, and the other indicators. But ladies and gentlemen, truly what makes a good trader has got F all to do what charging package you're using at all. A broker does make a difference, because if you're trading with a broker that has a 2-point spread in the FTSE and another broker that has a 0.4 spread, well, that just means that when you execute a trade and I execute a trade, the market only has to move 0.4 in my favor before I am break even, whilst you have to have it moving 2 points in your favor. What would you rather, 0.4 or 2? It does add up over time.
It makes sense when you use much higher amount of money. If you use little amount,
yes, that's right. If you're trading a counterpoint, you're just working,
But if you trade 5 stacks,
I have been known to trade 5 stacks. In this case here, I actually have a sell signal right here. So that's where we are right now. So if we had been in the bosom of our offices and we weren't congregated in the Connaught's room here in London, yours truly would have told everyone here about 10 o'clock this morning, selling short the DAX. Maybe I shouldn't be telling you this because you can start your own Telegram group saying, well, that's pretty easy. Yes, it is. What's not so easy is to sit through there's 12 bars in every hour. That means I would have been sat there for 24 5-minute bars waiting. What is being a good waiter also equal to? It's equal to being patient. Being patient for the right setup to materialize. And that, ladies and gentlemen, well, we live in a time where everything is at our disposal immediately. Does any of you come from an era where the shops closed at 2 o'clock on a Saturday afternoon? When you were kids, they would close. And if you ran out of milk on a Sunday afternoon, you were screwed. That you had to call your friends or neighbors and say, have you got any milk? Because I've run out. That doesn't happen anymore. So patience is not such an easy thing to come by anymore. And it is one of the things that I, as a trader, very diligently had to work towards overcoming. Oh, that's a bad sign, you're yawning already. It's because like, boy, or did you not get enough sleep, young man? Or is it the oxygen? No, of course, I'm humoring you, but I couldn't help but noticing it, but also wanted to tell you something that to me is truly important. Because I believe that when you have 3 hours of my time and you pay for it, it is up to me to give you my absolute everything, turn myself inside out so that you walk out of here getting a much better picture of what it requires to trade at the level that I do. And one of the things that I am very mindful of is adequate rest, proper nutrition. I don't drink, I don't smoke, I'm not Mother Teresa either, but I am so mindful of keeping my blood sugar at an even level. So for example, knowing that I have to talk to you today for 3 hours and you can't sit me munch through a sandwich or whatever it is, I've designed my own cakes. They are not cakes at all, I assure you. It's more wheatgrass than it's cake, but they are very high in fat because it just sustains me and keeps my blood sugar really level throughout so that I can give you my absolute everything. And when I sit and trade, I don't sit and indulge in Coca-Cola or anything. I make sure I have exercise, all because I know that whatever I put in here will have a reflection of what's going on with my decision making here. As I often say to my son, who can be a bit untidy, how you live your life at home is how you live your life out there. Being a parent, you're trying to instill something. You don't necessarily have to believe everything that I say, but I do try to keep a very clean path so that I can make good decisions here. That's important to me. We will have sold short right here, ladies and gentlemen. It's one of my most prized entries. And I have now given it to you. We shall go over that once more, or 2 or 3 times more in the next couple of hours, okay? I'm not just going to leave you. I'm not just going to leave you, don't worry. You will have ample opportunity to ask. But for now, we're just going to have to get the momentum going. But when I see a market close below a low, this is the lowest point. Right there is the lowest point of the highest bar. And when we close below there, after a double top, to me, that's a place where I want to sell short.
You will always find something you close it quickly and then try again.
Oh, I would have a stop loss there. We would have a stop loss above the high. Okay? Just remember that. Okay? Let's go back to our PowerPoint. Because of course, I'm not a one-trick pony. I have a few more things that I look at. You see, when you trade, you need to be able to trade in all sorts of markets. Does any of you partake in outdoor sports, such as, I don't know, surfing? I'm quite an avid surfer, loving it out there, paddling when the wave comes in. But there are times when when the waves are big. And if they're big, I need a different kind of board to when the markets are small. I can't let go, can I, when the waves are small. So I have to adjust my activities according to the environment. Now, some days the market are incredibly volatile. Well, you might want to dial down the trading size a little bit and increase the stop losses. Sometimes the market is strongly trending, so I need to have an ability to trade strongly trending markets. I need to have trained my mind to jump on board a strongly trending market. I also need to have a strategy for when the market are range bound. I need something in order to enable me to trade well in range bound market. We'll come to that. We'll come to that soon enough. So point number 2 is that we close below the low of the highest bar. There's a sell signal. Now I notice nothing but lower highs. Point number 3. What can we say about point number 3? Well, point number 3 closes above the high of the prior bar. So this bar here, we are seeing here, not exactly the lowest bar in the morning, but we close above it. If I see something like that, I'm going to go, right, we might have a reversal on our hands. So I may now begin to look for a sell signal, a buy signal, somewhere where I can get in. Then point number 4. Point number 4 is that we close below of the prior bar's low. Now you're going to go, well, hang on. Point number 3, we close above the highs. And now, point number 4, we're closing below. How am I going to deal with that? Good question. How are we going to deal with that? How are we going to deal with that we got a buy signal on point number 3 and a sell signal on point number 4? Because that's the reality of it. I haven't taken with me some beautiful chart where everything is just picture perfect. No, look, this is the reality of what I have to deal with. How do I deal with it? Do I sell short here? Do I buy? Do I sell short? Which one do I follow? And hopefully I will be able to answer that satisfactorily. Maybe you're going to go, hang on, I'm going to sit this one out. Number 5. What do I like by number 5? See, one of the things that I am very mindful of, especially when I want to jump on board an existing trend, is when a market goes above the prior bar. See, normally when I see a market that's trending lower and it's moving up, my instinct tells me to sell short around here. And I see this as a trading range, which point I want to sell short above the high of this trading range. So point number 5 would offer me an opportunity to sell short here. And I write limit order sellers at prior bar high. A limit order seller, ladies and gentlemen, is someone, a trader or bunch of traders that have got orders in to sell short just above the prior bar's high. If it's a bit overwhelming right now, just bear with me. It will become clearer. Let's do the next one. Number 2, clean chart. Now let's put some annotations on it. Number 1, we got to close above prior bar's prior bar's high. Number 2, we have a trend down in the morning, and there are still sellers around. And we see these sellers manifest themselves the moment we get across above a prior bar's high. So we got a high here and immediately sold off there. We have a slightly high move here and it gets sold off. Sold off. So what you can see from this range here is this is essentially a trading range. And sellers are coming in at the top of the range. And they are coming in and supporting at the lower of the range. So as a trader, you have to be very quick. Can I help you? This is a paid for event.
Okay.
Have you paid?
I haven't got a ticket.
Well,
It's a separate thing, is it?
Yes, it
I
is.
thought it was
Quite. Maybe we should close the doors at some point. But for now, let's leave them open because we get a bit of fresh air. It's a rather dark room. So imagine that we're sat there, and again, I want to utilize I believe that one of the safest places for us to sell short what I would still consider a falling market would be above prior bar's highs. So say that this prior bar here was 46, then just sit there and go 47, sell. 47, 48, sell. If you still believe that this market is negative. The amount of times you observe a market just go above the prior bar's high. I recently saw a YouTube video by a gentleman, someone who actually I thought was worth watching. He was an American trader, and it was actually a training video for their in-house traders. And he was pointing out exactly the same thing. And then he, one of the people in the audience asked him, in the classroom, saying, "Why do you think this works?" And he said, and I think it was so beautiful the way he said it, because he acknowledged, I don't know why this works, but I don't think I need to know why it works either. All I need to do is to be an observer of human behavior. And if I observe this often enough, and I can somehow still maintain emotional control and have proper money management, why wouldn't I be a seller here? My job is not to be proven right or wrong by the market. My job is to find safe entries in the market where there's relatively defined risk. I like the way he said that. And I like this approach to training. Because if I'm a seller here, I don't have the advantage of knowing what's coming after this. So when I'm training for myself, I am sat with a white piece of paper over the training day so that my eye focus on right here, right now. course I am going to experience times when the market moves against me. So now it comes down to the point of, well, how well do I manage my risk? But more importantly, would you believe it, ladies and gentlemen, how well do I manage my emotions? You might think, oh, that's all pretty easy, I'm just going to put a X point stop loss. But I firmly believe that people that make money, traders that make money in the financial markets, in the arena that we are operating in, quick traders, day traders, or swing traders, are the ones that are best emotionally equipped to handle losses, that are not phased, i.e. emotionally adversely affected by taking a loss, where you simply say, hey, that didn't work out, bang, out, next. Why am I saying that? I spent 10 years of my life watching people trade. People like you and myself for that matter. 10 years sat at a trading desk from 7 in the morning till 5 at night, or till from 11 in the morning till 9 at night. Watching people like you, all of you trade. And you learn a damn slight lot about people when you observe how they act in a market. And you see, what the scary bit for me is, ladies and gentlemen, is not that people lose money. No, but the scary bit is how good people are at finding winning trades. That's the absolute miracle of what I have seen when I work professionally in London, is how good people are at finding winning trades. But what the shocking thing is how they behave when it's not working out how they expected. Unrealized expectations are one of the sources of frustration and angst and anxiety and fear in our soul, in our nervous system. And part and parcel of becoming a professional, I don't even have to call it professional, let me rephrase that. Part and parcel of becoming a good trader. And let's define a good trader, someone who can hold his own. It doesn't necessarily mean private jet and first class ticket to Bahamas. It could just be, I am good enough to trade so that I can quit my job and trade for myself. Or I am good enough to trade 2 free evenings when I come home from work and the kids are swimming or in bed, so that I can add a little bit of extra income to my normal salary. I am good enough to do that. But in order to achieve that objective, you must begin to think, how am I going to avoid doing what the 90% of people are doing? Because the 90%, you're going to be focused on technical indicators, Fibonacci, Bollinger Bands, calendar channels, trading books, or courses, weekend courses, always weekend courses. You know why they're weekend courses? Well, because then the instructors don't have to trade live, okay? Because they can all appear like smug saints after the fact. But come Monday morning, it's a very different proposition altogether. So I believe that in order to be the 10%, you gotta start thinking very differently about trading. And that to me starts with how you handle your losers, because it is the losers that are your downfall. And I witnessed that over the 10 years, thinking, wow, people are really good at finding winning traders, but why do they lose twice as much on their losing trades than they do on their winning trades? Why? Well, because it's emotionally painful to realize that we are wrong, and our minds have a construct that says, I will do anything possible to avoid experiencing pain. And so if I have a losing trade, I'm just going to keep it open. Why? Well, because then I won't have to crystallize the pain. Do you understand that? Do you understand it intellectually is one part of it, but do you understand it emotionally? Are you at that point emotionally where you can say, fuck it, I can take losses. as they come, and it will not change my outlook. I'm not going to get impatient. I'm not going to get into a revenge mode. I'm not going to double up my stake on the next trade because I want to get back to an emotional pain equilibrium. Well, I have a lot more to say about this. Right now we're just going through what it is that I am constantly looking at. What do you think of this point here? What's so special about this bar that you're seeing right here, right now? So what do you think if you saw that, now with the knowledge that you have now been equipped with? What would you do? Okay, and would you accept that no matter what the outcome, you say, well, hey, I did what I had to do. That means I sold short down here, and I would have a stop loss up here. And that's all I can do. And maybe it's going to work out in my favor. Maybe it's not going to work out in my favor. Can we all agree, ladies and gentlemen, that intellectually, that's really easy to understand? Can I get a big fat yeah? Yeah. But can we perhaps also agree where our real journey lies, our real obstacle, our real challenge lies in understanding it emotionally? Yeah, that's a bit different, isn't it? It's slightly different to be able to act in your own best interest consistently, even if it means that you have to admit quite frequently that you lost money. I want to see what the markets are doing. Okay, well, what do we got here? What do we got right now? Okay, let's just hold our horses here, but we are in a live environment. Okay? What are you seeing? Why don't we change the time frame to 10 minutes? You see, to me, live is where I live. This whole thing of doing weekend seminars, it drives me fucking nuts because I can't show you what it's truly like to trade. We can all do it after the fact. But what are you seeing right here? Well, what do you think? Fine. I can accept that. Double top, double bottom. Absolutely. How do we trade ranges, Martina?
Selling at the top, buying at the bottom.
So what do you think we should do right now? Okay, so what if, and we'll do this now, real money, no bullshit, might nail down the trading side from 200 pounds a point down to, they said something a bit more modest, 20, 40 pounds a point, nothing too spectacular, right? Because you know the saying, right, I'm a surfer, but I got the back to the waves. It's not the ideal, but what if we bought right here, and we had a stop loss down here?
Excuse me, too late to buy.
Good question.
For me, you're too late. I will explain if you can too.
And you're going to explain to me why it's too late? Wait, I just need to have the answer there. You're going to explain to me why it's too late? Absolutely fucking not are you going to explain to me why it's too late. I'll tell you why. I have sat on a trading floor for 10 years observing people watching the market rally, and do nothing. It is never too late to join a trend.
Sorry to justify what I'm saying.
Absolutely, and you are more than welcome, but it is not your talk, young man. It is my talk. And we are the best of friends. We'll do 20. It'll keep us on our toes. Stop loss down here is 14.92. Now this is going to sharpen your senses, isn't it? Yeah, we'll put it in. You're risking 500-600 quid. It's about what I make from this speaking engagement. So we'll see. Okay, let's take a look at the FTSE. What have we got in FTSE?
Low.
Right, so we got a low. Where did that low close? It closed at its, okay, I'm going to have a crude joke, but let me blow this up as the nonsense of the bishop, but it's probably not linguistically correct, and it's definitely not politically correct, I'm sorry. This is the lowest point that I can observe right now, and we closed above that. Why wouldn't I want to be a buyer now?
You should.
What, do you think you know what's going to happen in the future? Do you sit here with a knowledge that I don't yet possess? Do you somehow have tapped into the ether and somehow, someone, somewhere, mythically has projected to you the outcome? Well, the whole notion of it is insane, because you wouldn't bloody be here if that was the case. So that the only thing that's truly at my disposal is to do what I'm trained to do. What am I trained to do? So we're going to do 300 pounds a point. Just because that's the way we roll. And we're going to put a stop loss in. I will put that stop loss in 12 points away. Might not be the best stop loss in the world, right? Maybe it'll work out. Maybe it won't. But if it won't work out this time, it might work out the next time, or the next time. This is a live account. It is not bullshit, ladies and gentlemen. This is what it's like to sit and trade at home. Now, ladies and gentlemen, please don't get clammy fingers just because I'm taking all the risk, okay? I'm okay with it. I'm alright. Maybe it'll work out. Maybe it won't. If it works out, great. I'll take you all to the pub, and I will treat you to a splendid glass of wheatgrass, which I'm sure is your preferred beverage after you've been subjected to my health regime. If it doesn't work out,
Doesn't matter.
hey, what was I supposed to do? How was I supposed to have acted differently? If I'm standing here and teaching you, and I don't want to act on the signal, what am I worth as a teacher? You think this isn't a real account? Here's my account details. What's a bit scary is how much money I made on a demo account. It's like, damn, that is because I built that up from 10,000. It's not bad, is it? Oh, it's so easy on the demo account. When it comes to the real thing, it's not so easy. Okay. Try not to get too flustered by the fact that we just made 800-900 quid. Just wanted to prove to you. Okay? Transaction history. What does it say? 92,500. Now there's 93,300. £1,000. Imagine I did that every single day. That would be £250,000 a year. How many people in here clears £250,000 a year? Didn't you think so? Now do I have your attention? And now do you understand why it is so important to emotionally just be, I just took profit because I wanted to prove a point. Yeah, a bad idea to take profit. You should just let the fucker run. Because, and you know why? What's your name? Peter. Peter, do you know why? Because how do you think I would look in 10 minutes time when the DAX has rallied 30 points and the FTSE has rallied 15? And instead of making £900 or £1,000 I would have made £8,000. How stupid do you think I look? Do you agree?
No. That's many reasons for taking out there.
Just wanted to prove a point. This should be the future of how seminars are conducted, is that you should say, I want to see you do it live. It don't have to be at an enormous size, but do it when the signal is there. Okay, right, let's carry on. Let's do some more. Who's breathing? You don't have to be nervous. By the way, ladies and gentlemen, do you need do you want to have a break or something? I know we don't have that much time, but on the other hand, 3 hours might do one. What I could do is in 20 minutes time, we could just take 5 minutes just to, maybe get a glass of something or relieve ourselves. I'm okay, but I think, could you be the timekeeper on 20 minutes? Yeah. Cool. Are you guys okay? Should I just take some questions? Are you alright?
Are you, sorry, can I ask, are you not looking at any previous resistance?
I did, I won. But it's a brilliant question. And just for that, I need to do a little bit of a detour. Okay? Just the tiniest of detours. Tiniest of detours. We are on slide 27. I want to show you this slide here. Have you ever seen this slide before? Yeah, but have you? You have. So it's not new to you. I must get new material. Well, this slide, are there anyone in here who hasn't seen it? Good, at least it's news to some people. What you're seeing here is the distribution of winning days and losing days in the Dow Jones Index over the last 30 years. Yeah, so say that the Dow was up 0.5% at some point in the last 30 years, well, that will be displayed somewhere in there on this chart, somewhere around here. So what you're basically seeing is the market, all the percentages gains or losing days, not trades, days, over the last 30 years, 7,500 observations. What strikes you as peculiar about this distribution? What did you say?
Even.
It is even. It's like, don't they call that a mirror? Mirror image fold back. That's what you're seeing here, from the middle, observed to the right, is basically what you're seeing in reverse to the left. Well, the answer here is, you're asking me, do I look at support and resistance? Well, yes, of course I do take support and resistance into consideration. But when you're trading stock indices, as we are focusing our energy on today, what's incredibly enlightening to know is that actually no matter how bad yesterday was, or no matter how good was, actually you start from scratch the day after. And I use this as my documentation for that argument, because over the last 30 years you've had some amazing bull markets. And this is going back to 1992. So from 1992 to present day 2022, we've had 7,500 trading days, of which 3,250 of them, no, that's 3,750 of them was losing, and 3,750 of them were winning. Does that add up? 3,750? Yeah, all right. And to me, that's mind-boggling, because when we started the Dow Jones back in 1992, it was trading at around 2,000, 2,500, and today we have 35,000. So the index has gone through an enormous expansion in the last 30 years. So you would have thought there's probably more winning days than are losing days, but that's not the case. So that does beg the question to me, well, if that really truly is the case, then what is it that people mean when they're talking about trend, or you must follow the trend? Well, if the distribution of winning days and losing days are 50-50, what do I care about trend? I have to deal with what's here, right now. At least that's my argument.
Sorry, Tom, you know on the DAX chart, could you bring up the live DAX chart?
Yes, let's do that. Of course I can bring up the live DAX chart. Yes, sir.
So, you know, if you look at the high right now, the high of the high,
This
there
one
is a
here.
obvious, and if you go down, there's a previous kind of resistance line along the top of it.
So let's put a 15-minute chart on and give us a bit more data, just so we have a slightly bigger picture.
So would you not look at like around 8 o'clock? I think it's 8 o'clock.
Of course I would look at that.
So,
Of course I would. You're absolutely right. Of course I am every bit as traditionalist as you are. I believe in the sanctity of marriage and I believe in double tops and double bottoms. No difference. Don't play the field. Don't have to reinvent technical analysis either. Oh, my girlfriend watches this. Okay, live chart.
The slide that you had,
Could you hold that thought for 1 second? Just I want to show you something. You see this bar here? What time is it? It's 11:17 in the good London time. That means there's 3 minutes left of this particular 10-minute bar. Say that bar closed right now. Say it closed right this very second. What would you conclude on the basis of what you're seeing right now? Hang on there, hold on there, Poindexter. Hold on your thought. I want you to. God, you know what? All right. How do you? There you go. Here's a 10-minute snapshot of what's going on right now, but I have frozen time. I need you to revise what you just said. And instead of coming up with a label of strong, weak, etc., I want you to instead tell me, what have you witnessed in the last 10 minutes?
Why came back
Where did they come back?
at the bottom?
What did I say to you about 14 minutes and 38 seconds ago about limit bias and limit failures? If I witnessed a... Oh, hey, welcome. It's nice of you to show up. What did I say to you about you witnessing a market going below a prior bar's low only to reverse back up again? I told you, to me, it argues that limit buyers are coming in and they're using this as a buying opportunity. Hence, when I see something like that, the ideal time obviously have been to have said, you know, I'm going to take a chance and I'm going to buy below the low of this candle. That, what's your name? Zibi. Zibi, as in Civet?
Z-I-B-Y.
Okay, go. I have no disrespect. Zibi, that's a pretty cool name. Where's that from?
Polish.
Zibi, welcome. Did you travel from Poland today?
No, from Essex.
From Essex.
She as well.
Yeah, I've noticed.
Cool, yeah. Zibi, where you want to become, where you want to work towards to make this your endeavor so that you are probably 50 years younger than I am, so that you one day stand here and I'll pass on the baton to you, is, say, you teach people, whenever that time may be, saying, you know, it might be what you need to work towards is to become biased down here. And then someone's going to say, well, what if you carry on further down? You said, welcome to trading. How do I know? I have trained my emotional makeup to accept that whatever may be, may be. This is why I go on and on and on about technical analysis. Yeah, great. It's like the top of the iceberg. Emotional analysis, trump anything that technical analysis has to offer you. taking trade after trade, then what good is technical analysis for you? Think about that for a second, as I did for months and months. You sat there, lights turned off in your living room, sat on the sofa, the world goes by outside, you're thinking, why the fuck can I not do what I am supposed to do? Why can I not act in my own best self-interest? Who do I have to become to be the person that can just take these trades? Why is it so emotionally difficult for me to accept when I am not? These seminars are too short. I need a lot more time. Let's carry on. I think we were at chart 27, right?
Should we take a break then?
8 minutes.
Oh, that's not bad.
Silly. Silly. Oh, you're gonna love that, aren't you? Oh, I might just sit. Number 3, clean chart. Oh, that's a pain in the arse of a chart, isn't it? It's like, oh my god, we're breaking down. Oh no, we're gonna go up again. Oh no, we're gonna go down again. Can you imagine that you just got yourself a bicycle there? Hey Simon, you just got your bicycle again. You're all excited, and the next one you think, fuck. Okay. Here's my annotation on this particular chart. Point number 1, close above prior high. Okay? Do I use that as a bicycle? Well, technically I should, because we should have a stop loss. Limit order sellers immediately coming in. Not a good sign. Not where you want to see bar number 2 when you just bought, is it? You just bought a number 1. Number 2, you're thinking, looking good. They're getting above the prior bar high. Cool. You ever said, come on. And then you go, you get it. Look at my face. You're like one of those emojis like that. Not particularly promising sign when the chart immediately after you just bought closes halfway down after it has just, but hey, you know, we are forever hopeful. That is, after all, the hallmark of human beings. Bar number 3, you're thinking, this is not good, because Tom Hugard once said that when a bar closes below the low of a prior bar high, which is exactly what is happening right here. Bar number 3 closes below. You're thinking, should I really be long this? Maybe not. But do I then go from being long to being short? Do I turn on a plate? How emotionally difficult is that? I've heard of professional traders who have to have a little bit of time back from having been in one direction, can't flip on a dime. I, on the other hand, I'm less bothered about that, but I accept that perhaps that I'm unique in that sense, but it wasn't always easy for me to do that. So it must have been part of the training. I like to think that before the market opens on any particular trading day, we just check. I always go to a website called forexfactory.com, and I just check what news are coming up on the day. I don't know what you use, doesn't really matter what you use, CNBC, Bloomberg, whatever it may be, but I just check that. Have you ever not noticed and known about a news event, and then you had a trade on, and then either you're going, wow, I must be a fucking genius, because I'm assuming in my favor, or go, how the hell did that happen? How did I read this so wrong? And then go, yeah, you just took a position right in front of the Fed announcement, or something like that. Yeah, or central bank or something, or Lagarde is speaking, or Powell is speaking, or whoever they're called. Okay, and number 5, we close above prior high. Okay, interesting. That would have been a good trade, unless we didn't get out in time, and so forth. I'm not saying we should. See, what I don't want to do is to say, oh yeah, and then I bought here. That's just not what I'm about as a teacher. What I want to say is, okay, we got a low, higher low, and here it might not be the low of the day, but as a retracement technique to join on board, what you're seeing is a series of 3 or 4 bear bars, but then you close above 1. Now, here's the fallacy of education is that I have the benefit of seeing it, how it manifested afterwards, so it's much easier for me to stand there and use it and go, yeah, I can see that, oh yeah, that makes perfect sense. But to do it in real time is an entirely different proposition. Let's do the next one, because I want to move on. But I wanted to give you an example, and then we'll take a 5-minute break. Is that okay, 5 minutes? I wanted you to have what I probably consider my most prized technique. Maybe in a few variations, but when a market on a short-term time frame, which is of course my favorite trading instrument, the 5-minute time frame, the 10-minute time frame, when I see a market, say make a double top or a double bottom and close below of the highest bar or close above the lowest bar, to me it is probably the technique that I have made most money from. Here's the thing. I have done that on a weekly chart. Back in 2015, I shorted the Dow Jones on a weekly chart basis this signal, and I had the most phenomenal of trades because it was one of those where I was greatly helped by the Greek default crisis. I mean, that truly did help me. I'm not blind to the fact that I was also not a victim of circumstances, but I was benefited by the circumstances of a Greek default crisis. But that whole concept of, hang on, I'm selling short the Dow because this week's close is below the low of the prior week's low. And that bar there happened to be a double top. If I'm not mistaken, I did the same back in January 2020 in the S&P 500. We can check that, the trades come and go all the time. I wanted you to take something away that could be used on a daily chart, weekly chart, or a 10-minute chart. Some of you may say, does it work on a 1-minute chart? Yes, of course it does. The whole construct works on any time frame. But if you do trade it on a 1-minute chart, you have to be prepared for having a success rate that isn't particularly high. And the reason why I prefer to trade this on a slightly larger time frame is because emotionally it's more soothing. Because I find that when you give it a slightly bigger time frame than say a 5-minute, perhaps a 10-minute, you get better quality signals. Isn't that also what we want? We want good quality signals. We want signals where, yeah, I can reasonably rely on this. And what I'm showing you here is basically a very simple example of me identifying a bar that closes below a prior bar's high. Sorry, this is the high point and we close below. Okay. If you want to break, yeah, it is, we're sort of halfway through, and much to my annoyance, we are definitely not halfway through the slide, but I'm sure we can make up for that. So we take 5 minutes, but please no more, we don't have so much time together today. And a break for you also means a break for me. Okay, I want to attach a comment to trading today. When I trade at home, I always look at what the Dow is doing as well. So I wouldn't just be trading the DAX. I would be trading the DAX, but looking at, well, what is the Dow doing? I wouldn't just trade the FTSE. I would say, what I am doing, this idea of buying or selling short, is actually supported by, say, the Dow Jones index. It's not that the Dow Jones index is leading Europe. It isn't. Volume is particularly thin. But I do think that if I spot a double top in the Dow and I see the same double top in the DAX, as you often do, then that gives me more impetus to be stronger in my conviction on the DAX index when it's supported by what's going on in, say, the Dow index. So to me it's really important to make sure you understand that I don't just look at an index isolated which is also perhaps the obstacle that I have with the live trading event today, is that I don't necessarily have the clearest of views about what the other markets are doing. But at home I'll have 3 or 4 screens. I can say, okay, the Dow's doing this, the Nasdaq is doing this, and the FTSE and the DAX is doing this. And it does help with the overview. Having said that, as long as you have a setup, then for all intents and purposes, that is all you need. I just find that it adds a nuance to the trade that enables you to trade with a greater degree of confidence when you can see what other related markets are doing. When you look at the markets today, you're thinking, right, if I'm going to get a trade on today, I will need some kind of retracement. I need some kind of signal. I don't have anything right now. All I have is a market that's trending lower. And while I technically just jump on board right now, I'm not sure that I appreciate the risk to reward, because if I was to sell short here at 70 area, technically I would need to have a stop loss. Well, when I say technically, I could have a stop loss wherever I wanted to, but if I look at the DAX right now, I could sell short right here, and then I could have a stop loss up here. The odds of being stopped out are significantly high, even without the market necessarily reversing. And I would probably rather, if the market were to come up here, sell short up here. I have a sell signal here because we closed the lower, the highest bar. If I was to sell short here, I would have a stop loss here, here, here. So I'm hoping that over the next hour and 15 minutes that I am able to get a trade on, another trade on. We have a double bottom down here in the FTSE. We may also say, okay, well, maybe we could put in a buy over here. So I will check this in, it is 11:45 now, so I will check this again in 5 minutes time, and then again in another 10 minutes time. Okay? Do you have any questions on the live market right here, right now? Okay.
I go down, and then what would be your stop loss when you get at the bottom?
So say that we decided to buy a double bottom down here. Say that we decided, well, I want to be a buyer down here. You say, well, how much do you want to risk? Do you want to risk 5 points? Do you want to risk 10 points? Do you want to risk 20 points? From my point of view, buying a double bottom would make perfect sense, but I would love to have that supported by what's going on in, say, the Dow or the DAX. And so if we're looking at those right now, you have to ask yourself, do you want to be a buyer of the FTSE right now when seemingly the DAX is in a bit of a cascade right now? I can't actually answer that on behalf of you. I, on the other hand, would say, okay, I think I would prefer just to stick on looking for short signals here as opposed to ones. I don't necessarily believe that this here is a double bottom buy in the DAX, but of course I could be wrong. But since it's my trading account, as it would be your trading account, it is up to you when you want to take that risk. Well, having said that though, when we're looking at the FTSE, it looked comparatively stronger than the DAX does, and to some extent also the Dow. If I change the time frame in the Dow, we can say, okay, we do actually have a reasonably good move. So maybe this is just a flutter below the low of the midnight low. So what if I bought here in the FTSE, and well, why don't I let you decide? How big do you want the stop loss to be? Do you want it to be 10 points? Do you want it to be 20 points? I'm not going to go any higher than that. One way you could do it, you could say, well, look, why don't I look at the chart right now, and I look at the time frame, and I go, well, how big was the prior candle? Well, it was about 12 points. So maybe we could use a stop loss of about 12 points. Okay, so we put a 12-point stop loss in. So now we've got a stop loss. What about the DAX? Do we want to do anything yet? To me, I don't see an argument for being long the DAX right now. I see only an argument for being short. I only took the long position in the FTSE to prove a point of, well, I am technically at support, so let's just trade it. But you also see I've scaled down my trading size to £25 a point. So it's more like a token gesture to say, hang on, okay, I'm not overly convinced about that. I certainly wouldn't want to trade it in big size or bigger size. You know? So let's go back to the PowerPoint and we can follow the FTSE soon enough. And it's about a point or two on the wrong side. So let's go through the rest of these charts. There's 11 of them, but I don't want to go through every single one of them in such great detail because I have other things that I think is also important to highlight. I think point 1, 2, 3, and 4 are interesting because whilst technically you have a reversal signal or you have a bar that closes above a prior bar high, you then also have a lot of limit sellers, meaning that those people who immediately sold every single move above a prior bar high, they made money. They did that on bar number 2, and on bar number 3 they also made money. On bar number 4 they also made money. It wasn't until bar number 5 they actually lost money if they tried to sell above a prior bar's high. Bar number 6 gives a pretty clear close below a lower prior bar, and whether you're selling short there or you see that as I need to be mindful of that, and I'll use that as a gauge for wait a bar, 2 or 3 bar, depending on whether I want to be a seller, sell short. The point I'm making, I want to illustrate with a laser pointer here, is this bar number 6 closes below a prior bar. There's other thing that I pay attention to bar number 6 is that it is one of the longest bars that we've seen over the last 1, 2, 3, 4, 5, 6, 7 bars. It's right up there in length. Do you understand the length of it, the longitude of it? That's also important because the significance of this bar here, this little bar here, versus this bar here is, well, hang on, there's a lot more body, and that means that there's much less indecision. They're pretty clear cut that they want to sell short this all the way down to the close of this particular 10-minute bar. What that says to me is that there are sellers abound and they're pushing the market lower. And where does that bar number 6 bar closes? Because that's immensely important to me, is that does it close right at the low? Is it what I call a real thick bear bar, or is it a real thick bull bar? I'll give you an example of both. This is a real thick bear bar. This is a really thick bull bar. It closes right at its highs. And when something closes right at its highs and not in a trading range, it gives me confidence to want to be a buyer. And then when I see a real thick bear bar, it gives me confidence to want to be a seller. Okay? Let's move on and go through these relatively quickly. Here's the clean chart on number 5, and here it is annotated. But now I haven't put any text on. I've simply just pointed out bar number 1. Well, it comes after a bull bar, and so a really thick bull bar, and we close below prior bar's high. Number 2 closes above prior bar's lows. Prior bar's high, while number 1 closes below the lower prior bar. Bar number 3 closes below prior bar's high, which I consider that to be a double top from earlier in the day. So this here is essentially a double top. And that to me would be a much more considerate sell signal. Bar number 4, no idea. But I do know that if I was on the side of that, I'll be going, oh shoot, did I miss something? And considering it happens exactly at the hour at noon, it would suggest to me that it's a news announcement or something. A Bank of England, something like that. Let's move on. Here's chart number 6 is clean. and here it is annotated. And I think we'll stop, I have another 5 of them, but I think we have seen enough to know what it is that we are looking for, or sorry, what I am looking for. Bar number 1 comes up with an uptrend, and as such, when I see that bar there, I'd be thinking, yeah, it would probably be a good place to buy at the close of bar number 1. The following bar is red. That doesn't fill you with a lot of joy. The following bar is an inside bar, following bar is an inside bar. Bar number 2 would give me some joy whilst it's happening. But what would tremendously concern me about bar number 2 is that it goes and makes a new relative high in for this trading range, but then it closes below the high point and it closes below the midpoint. If I see that, I'm personally thinking, ladies and gentlemen, this doesn't look so overly good anymore. Because if there really was buyers, they would have pushed this market higher, but they're not there. Oftentimes, I'll sit at the end of the day, trading day, and I'll say to myself, why didn't I trust what the market was telling me there? Why was I putting my own projections and my own hopes in front of what the market was genuinely telling me? So at bar number 2, what I'm seeing is a market that says, hey, let's push up past point number 1. And at some point during those 10 minutes, the market goes, yeah, not so much. We're just going to go back down again. And at that point, I don't know that the following bar is going to be a black bar. I don't know that. I don't know that the following bar is going to make new lows for the morning either, or relative low. The challenge that we have is to read it at that moment, not projecting what's going to happen in a bar or 2. It is to be able to say, so that we come to a point in the training of our eyes where we say, okay, I bought at bar number 1 because it was a bull bar and it closed on its highs and it looked good. It looked as if there was support down here. It looked like a decent place to be down here, didn't it? It made a low and then we closed the bar, so that looks good. So I bought up here, or maybe I waited and I got lucky and I bought here, but either way, I bought up here and maybe I put my stop loss down here just below it. Okay? And then I go, oh, that's not so good. Oh, that's a bit better, that's a bit better. Oh, okay, maybe I got hopeful here because this actually looks quite good. But during those 10 minutes, the market moved all the way up here, finally got our position into positive, after which it began to trade lower, and I say I'm not using that in an absolute religious, rigid context, the 50% halfway line between the top and the low, but to say, well, it doesn't actually look particularly promising anymore. I wouldn't look at that close on the 10-minute mark going, wow, I am so glad I am long. Personally. Now I know that we know what happened afterwards, but irrespectively of that, I'd like to think that I would say that no matter what, saying, well, okay, there's an awful lot of tail there. There's an awful lot of indecision. There's an awful lot of people that decided they didn't no longer want to be long the market. That's what I sit and stare at. That's my profession. To sit and gauge that market. Had that number 2 closed on its highs, so it looked like a real positive bar, something like this, obviously white. Not that you can really see it now, but if something like that, you think, well, now I really got a reason because we're making fresh highs on this tiny little hour range, and we're closing above 0.1. Now I actually got something to be positive about. I don't see that personally here, and to me, part of my vocation is to evaluate each bar as it is. It's not. My profession is not, I'm taking a trade and then I am off to the golf course. If I was having the golf course mentality, I would trade on a larger time frame. I would be trading on an hour chart or 2 or 4 hour chart, which is, of course, is entirely doable. But one objection I have to some of the YouTube videos that are featuring into our, we want to work something, and then an advert comes up, and some gentleman is saying that he's off to the spa and it's 7 o'clock in the morning and his trading is done. Well, to me that's ludicrous, because how do you know that the setup is going to happen exactly at 7 o'clock? The setup may come at 8 o'clock or 9 o'clock or 3 o'clock or 4 o'clock in the afternoon. And I don't believe that there is such a thing as a lifestyle as a trader. I mean, can you be a lifestyle dentist? But the very notion of being a lifestyle QC or a lifestyle tennis player or a lifestyle lawyer, it's ludicrous. A friend of mine here, he is an advertising executive, and a marketing and in a digital marketing company. He's present here today. But if I had a conversation with him, I was saying, so are you a lifestyle digital analyst that you can sort of be done at 7:15 in the morning and then you go off to the spa? So the very notion of it is ludicrous. Peter, what do you do for a living? If you don't mind sharing, it's for you to say whatever.
Blockchain stuff.
Yeah. So, well, are you a lifestyle blockchain stuff guy? It does smack a bit of contradiction that lifestyle sort of suggests that we can just take it or leave it. But I don't believe that we can take it or leave it. What do you do for a living? And you don't have to share. You can just sort of chill.
Yeah, I don't do investing.
Yeah, all right. Okay, so you say you're a property developer. Yeah, for the sake of it. Yeah, you identify a plot of land and then you just, you would just imagine. Yeah, you identify a plot of land and you get planning permission. You go through the whole rigmarole and you got sewage and contractors and deal with them and people that don't show up. Is that a lifestyle? Like, oh my God, that's a plot of land. I'm just going to develop I'm just going to go planning. But it doesn't. I don't know why. People are so quick to portray my business as something we can just take and leave. But anything else in the world is definitely not lifestyle. I don't have a lifestyle dentist. Definitely not. I want to be able to rely on him being there when my teeth hurt. I do know that at times I sound like the man I'm beginning to develop into, that grumpy old 50-plus-year-old that's seen too much bullshit in his lifetime to let it pass by and not make his feelings known about it. Okay. Right here, right now, we got a long position. How do you feel about it? Do you think, oh, I'm so glad we're long, or do you think, shit, it's better? I mean, I know we're actually in the money right now, but it's not, you don't sit there and go, oh my God, I am so glad we are long. But if it began to rally, you might think, well, not bad. The thing you would probably do is you would look over on the DAX and go, oh, okay, DAX seems to be holding right now. I mean, it has a long way to go. Would rather have been short, right? But right now it seems like there's been some short coming in. What's the Dow doing? Okay, let's do that on the 10-minute chart. So, I think we're at that point now where we can say, I have given you an insight. No, wait. Do you feel that you are beginning to see what I am seeing? Because that was the whole purpose of this. Peter, do you beginning? I'm not saying that you actually see the world with my eyes as the Depeche Mode sings, but are you beginning to get an inkling of what it is that I am looking for?
Yeah, I have a question about on point 2.
Let me blow up point 2, okay? And I'll take the laser pointer. This point 2 here?
Yeah. So you said, how would you be feeling, point 2, seeing it being indecisive? I was wondering,
is it what you think, or is it what professional traders are they going to be saying, oh, we're not confident about this, maybe we should be saying? So I was sort of trying to double guess the market in terms of what they drive it. So should you be thinking just of yourself or how others might be thinking about it?
I think your question is a lot better than you perhaps realize it is. And I say that not because I in any shape or form want to appease you or blow smoke up your behind, but because I think you inadvertently highlighted a philosophy that is worthwhile contemplating. Does it matter what I think, or should I rather think what is the market thinking? Do you get that differentiation? Because you might sit there and think, I'm not even a fish, I'm an amoeba in an ocean full of sharks. So my say matters nothing. Rather, I should focus on what are they thinking. And so, addressing it from that point of view, I argue you should say, I believe that the big boys, the big fish, the whales, the sharks, whatever we call them, had doubts about this market. They've already pushed the market lower earlier. We took a chance at point number 1. Maybe that was ill-fated, maybe proved to be a good decision. But at point number 2 was probably the point where they had an opportunity, the bulls had an opportunity to push the market higher. And they faltered right at that point. They were not able to push the market higher. That's how I see bar number 2. What would, Peter, you and I have to be very careful here that we're not being deceived by our eyes, because we know what happened on the subsequent bar, and we know what happened on the subsequent bar and 1. So, let's reframe the question and say, what would make you happy? What would make you feel good about being in a long position? The answer to that would be that bar number 2 closed at its high, or near its highs, with as little weight as possible, and it closed above bar number 1. Do we get that? No, we don't. Not here. Where do we get it? Do we get it at number 3, 4? Say we're looking at this bar instead. It's not numbered. But say at bar number 4, you actually get a market that closes above the prior bar's high. Where the laser pointer is right now, do you see that that bar with that long tail and it closes near its high, do you see that it closes above the prior bar's high? It perhaps not so easy to see, it's quite marginal, but it does nevertheless. The following bar, how do you feel about that? Well, it is not as indecisive as bar number 2. It's not great either, but at least it's still holding above the prior bar's high, which you can barely say for bar number 2. Either way, you could argue, I'm going to move my stop loss just below the low of this bar here. If you are the day trading kind, which is after all what I am, the topic of today. The following bar, how would you feel about that? Now you begin to think, better book that holiday. Joking aside, but now you begin to think, okay, that's what I want to see. That kind of bar makes me happy. And the following bar, although it does have a...
My question was, do you want to see it, or how do you think the market is seeing it, or the big boys are seeing that long bar?
To me, at that point in my stage, I think those two are quite amalgamated, that I'm no longer differentiating. It's just I see that, and by extension, I believe that that's what the professionals are seeing well. There is something, though, that I think warrants a topic of its own, probably without... outside the scope of today, but now that I got you in a group, perhaps I can send you something else. But there is something to say, that is, don't forget that we actually traded the amalgamation of more than 100 shares in an index. That's what we're doing. So in effect, we're trading the behavior of 100 different individual stocks that shapes what's called a stock index. I coincidentally find it easier to trade a stock index than many currencies. Much easier. I find that the overlap between the bars are much less pronounced than, say, in an FX chart. That's my personal experience. You have to agree with me, yes?
So if you went in at 1 and your stop loss was below the 1, but you're in at 2 now, would you close the trade or would you let the stop loss run out?
I would probably be stopped out. I find it emotionally more soothing to just let myself be stopped out. Because I generally have my stop loss at a point where I say, if you come down here, I am probably wrong. That does not exclude me from being screwed. You know what I mean by that? Where you get stopped out only to see the market bulldoze its way in your original direction. Yeah, I am not immune to that either. Not at all. Let's carry on. Yeah.
The first trade that you're in, it's a similar answer to you gave to the guy, but if you didn't like the trade, how can you just didn't close it? Wouldn't it say your brain power and having for a better odds of?
Okay, so we are in a trade right now. We bought it at 10, it's at 13, so we're making a few points. But what we did, I believe, is that we bought a double bottom. But the reason why I have severe doubts about this position is because the DAX and the Dow are very weak. Hear me out for a second, ladies and gentlemen. What if we used a strategy that was, I'm going to put out a teaser. What if this wasn't a big position? What if this was just a teaser position that emotionally let us gauge, do you want to be in this market, do you don't want to be in this market? And so if I get stopped out and I'm trading at perhaps a tenth of my normal trading size.
So it's like alert.
Kind of, but it's a little bit more alert because now there's a slight emotional attachment to it. So what if this bar, this existing bar here, which has another 8 minutes to go, actually closed on its highs, and say for the sake of the argument that it closed above this little trading range here, do that not make me think, actually, I might begin to build on that position? You asked me in the break, how do you add to positions? I don't have a scientific framework from which I add to my positions. Much of my adding to my positions is very much dependent on, well, how good do I feel about this position? Do I feel the market's really, can the market support that I can push this position? Do I feel that there's enough momentum behind whatever direction I want to push it? And from my point of view, that's practically impossible to quantify. Practically impossible for me to pass on as an instructor to someone else saying, I think you should add when the market is doing this. The best that I could do is to say, hey, if this market that you're currently witnessing right now closed on its highs, preferably closed above the lowest bar you see. Look at it right now. What's the bar just before? That's the lowest bar of the day. Do you agree with that? What? No, over here. What if we closed above that? Then we would have everything in place what we have spoken about for the last hour and 30 minutes. Then why wouldn't we consider adding to that?
Sorry, are you considering the support line at 2200?
This is the FTSE, but I think, see, allow me a slight detour. Yes. I believe that we as traders have to be mighty careful about reading too much importance and significance into what happens during the night. Please follow my cursor right now. Do you see all this stuff here? Do you see all of this? Practically from here all the way to there, and last night. All of this is not grounded in stocks trading. That's grounded in people like you and I betting against each other. Essentially, it's not the stocks that are trading at 2 o'clock in the morning. They're not. So it must be something else. So I find that perhaps we should be mighty careful in putting too much significance into support and resistance that may have happened at 2 o'clock in the morning. That is my personal opinion. But unfortunately, the brokers that we trade with, and it's not really a critique of the broker, they just make the data available, is that it would be nice if they could somehow take all of that data away that actually oftentimes confuses us. Because the FTSE, for example, closes at 4:30 UK time, and then it opens at 8 a.m. the following day. But all that data from 4:30 in the afternoon to the following day at 8 a.m., for all intents and purposes, could be quite damaging to our understanding of what is support and what is resistance. Because true support and resistance must be based around what happened during the actual trading hours of the stock index. You don't necessarily have to agree with me. It's a thesis, it's a hypothesis. It's just one that I happen to believe in. Okay. Did we get stopped out, or am I still in? I'm in with a chance. Okay, so a practical example, okay? So here we are. We're not exactly spinning gold here, but what's the low of the day? Well, the low of the day is 75.08. We bought it at 75.11. Why don't I just move that stop loss to 7? As a trader, haven't I just minimized my risk? And then, hey, maybe it's gonna kick off and I can add to it, or maybe I can stop out. I know that I will have to accept that about 40 to 45% of all my trades are gonna lose anyway. Why not try and lose as little as bloody possible when I do lose? I'm happy to carry on, and I know that. Did you know something, ladies and gentlemen? I hate to be the bearer of bad news. We got 45 minutes left. Isn't that just shocking? I mean, don't you just want to be here all day? Yes. Yeah, me too. I just want to be here all day, and I want to give you my everything so that you can see for yourself what it's like to interact. But I also have some things I desperately do want to tell you. I want to give some thoughts on trading teachers. So, now that I've spoken for a while, here are the 4 master classes that are taking place today. Now, I know Charlie, I don't know Sunil, I met him out in the foyer. Utterly pleasant gentleman. And Adam Harris, I think I met once or twice. But say Charlie's title, Finding Low Risk, Ultra High Reward Trades. Hey, I'll give you a low risk, ultra high reward idea right now. It's called a lottery ticket. Very little risk. £1. Reward? Enormous. I mean, you risk £1 and you could end up making 5 million quid. But I find, as you can probably imagine, that's a rather deceiving message. Because what are the odds of winning on a lottery ticket? 1 in 14 million? Thereabouts, give or take. I find it much more important to say, well, look, what are the odds of me winning or losing on any given trade? Well, roughly, if I do my job well enough, I probably don't have much better than a 60% chance of winning. But when you think about it, when you look at this, finding low risk, ultra high reward trades, are you not missing the whole concept of what the market is all about? Do you think that the Goldman Sachs traders are out there going, yeah, it's okay, yeah, take my money. No, when you execute a trade, there is someone on that other side going, you're fucking wrong. Mate, you can have it. You want to buy it, I'll sell it to you. That's my point. The market is not a charity. And I know that emotionally. So I know that when I do execute a trade, there's probably no more than 60% chance that I'm actually going to be successful. And that, ladies and gentlemen, makes this arena a very difficult arena. Because if you go to a doctor and you need to have vital surgery, him telling you have a 60% chance of success is not going to fill you with confidence, is it? You're not going to go home and go, woo! 60% chance of this. You're going to go, when it's your heart we're talking about, your lungs or your organs, you're going to go, yeah, I'll settle for 100, please. Anything less is going to slightly give me an edge. Yet I operate successfully, I might add, with an edge that makes most professionals go, yeah, I don't see the proposition of this. If universities were run on a pass rate of 60%, do you think those universities do you think that everyone would flock to Yale if they only graduated 60% of their students and 40% failed? Don't think so. Think about it for a second. What you guys are, and ladies, you're dancing in an arena where you have to become quite adept at losing. If you don't, and if you haven't mentally, emotionally, more importantly, built that into your psyche, you're gonna not do well. You're not. Would you like to know? Yes, of course you do. This is such a stupid question. How I got to that point was through two means. One, brutally, honestly reviewing my own trades. Brutally honestly. And quiet contemplation. Some of you may call it meditation. I'm not suggesting you sit there chanting Om Shai Ram. It's not. It is mentally affecting my mind to being able to take losses without having this tremendous anxiety. I spent 10 years watching you guys trade. You're brilliant at finding winning trades. You're shit at taking your losses. Why do you think that is? If you were to quietly contemplate for, say, 5 seconds or so, why are you bad at taking your losses? You will probably find that it's mostly because you don't want to admit you're wrong. You just don't feel like taking that loss. Another thing that I've tried to do today is I did not want to be the instructor that told you this. I did not want to say, oh yeah, I sold short there. Now, it's a fact that I sold short there. I just don't want to be that guy. I don't want it to be known to you and to anyone else that I'm the instructor that goes on and shows all these beautiful trades after the fact. Because that will teach you nothing. I'll tell you what really happened. Did I sell short there? Yes, I did. And those of you who are astute enough will observe that that was a trade from yesterday afternoon in my Telegram channel. But this is what it looked like at the time. Very different, isn't it?
Yeah.
Oh yeah, I can see that. There though, he would say, why are you betting against the trend? Shall we just pause for a moment and appreciate what has just happened? Yeah, of course I was so short there. I see that, Tom. Well done, great. Oh yeah, I nailed that too. Same shot. Now you're thinking, yeah, why would you sell short there? You're betting against the trend. I'm betting against the trend because I see that as a double top sell. Before, after. Easy. Not so easy. Now there's a reason why I'm bringing this to your attention, because I have just told you that there are 2 ways that I improve my trading. And that is, by the way, an ongoing thing, Grant. It's not an every now and then thing. It's a bit like your marriage. Your marriage is not made the sacred institution that it is by buying her a rose every now and then. It is constant maintenance. You know that better than anyone. Not that I'm highlighting you, but any one of us that would like to. You know, what is the saying? Happy wife, happy life. Yeah, get her on your side and life is so much easier. Same with trading. It's not a one-off that I had to it's not a one-off to have to train my mind. It's an ongoing thing because the mind is a muscle, I believe. And if you don't train that, it doesn't mean you go to the gym, you're like, whatever. We'll just pretend you go to the gym. Sure you do something, maybe you're a runner. Yeah, cycling, there you go, okay? You also know that if you don't cycle for a few weeks, what do you develop? You develop atrophy. Yeah, the muscles are, geez, man, I used to be able to do that 50-mile ride in no time. Man, I am sagging and lagging. I like to cycle too. And you haven't been out there for a while. All of a sudden, what the hell? The hips hurt. And I'm stiff. And the mind is the same. And this is a daily ritual for me. And the reason why I'm bringing this trade along is because I did sell short there, but I did not get out there. And I want to tell you what I did, and I want to tell you what I then did afterwards. You see, I did sell short there, right there, and I can prove it because I got the ticket that's time stamped. It's 10 o'clock. 10 o'clock, you see it. I'm not making this crap up. I truly am what I say I am. And I did sell short at that price. But that's about where the glory stops. Because a few moments later, I added to it. Yeah. Because I'm a good boy. Add to your winning trades, don't add to your losing trades, as Mama said. She didn't probably say that. She said, eat your greens, okay? Be big and strong, eat your greens. She never said anything about adding to your winning trades. She probably would have said, why don't you get a real job? That did happen. It wasn't just my mom. It was everybody. Really? My sister genuinely believes that what do you call that when you are addicted to gambling? Well, we have a Danish word for it called ludo. And ludo is actually Latin for play. And so manic obviously is manic. Yeah? You're playing manic. And she generally believes that what I'm doing is essentially just a gambling addiction. And I said to her, I can see why you would think that, but I assure you that the discipline, the emotional discipline that I have to excel in order to survive in this proves that I am anything but addicted to this. Anyway, I add to it, and then down here, 6 minutes later, I close. Pretty good trade, isn't it? I want to show you this.
Tom, can I just jump in there quickly?
Would you mind if I just finish this slide and then I'll come to you? Promise you, okay? That trade that I wanted earlier yielded 40 DAX points to me. Okay, I intend to trade the DAX in 200 pounds a point, which, for all intents and purposes, if I could do that every day, is £2 million a year. Now I'm in a professional football league. Okay? Or if I do it on a 60-40 ratio, so I win 60% of them, but I lose 40% of them, I still have 400,000. That is faulty thinking. That is just plain wrong, because that sidesteps the very thing that I'm all about, which is process. And let me show you what I mean by this. You see, process goals versus outcome goals. I'm a man that is all about process. I don't think about the outcome because the outcome is decided by the market, not by me. The only thing I can control is my risk, my emotions, my stop loss, my placement. I cannot dictate what the market should or shouldn't do. And when I see this, and then I subsequently see this, I know what the hell went wrong. I don't sit there and go, wow, you made 20 points. I go, why the hell were you not on board? Why did you get up so early? You know that saying, you can't go broke taking a profit? Of course you can go broke taking a profit. That's the whole point, is that we're snapping away at our profit. So when I do my midnight homework going, Why did you get up there? What did you see there? Could you not at least have let one of the positions stay? Could you not have moved the stop loss down? Why did you get up? Were you, the idea here was, did you know that this was going to be a scalp trade? No. Well, then what happened? Why? Why did you? Otherwise, this is a thing, this is what you're famous for, Tom. Why did you make 14 points as opposed to 300 points? What went wrong today? And so I sit there and go, okay. It was really hot in the house. Opened the window, fucking neighbor's dog kept me awake half the night. Woke up in the morning, feeling groggy. I don't drink coffee anyway, I drink, kombucha tea or whatever it is, full of antioxidants and all that. And I felt all morning going, I am sluggish, I am not in the zone, I am not with it. I don't feel my normal. Should I have been trading at all? No, I shouldn't. If you are not as prepared as you would for the most important exam, should you really be trading? You see, a day like that is the kind of day where I would have gone, you add a bit more, 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 you add a bit more. That's how I need to be feeling. Really hungry for it. And if I'm anything less, maybe I shouldn't be active in the market. This is what holds true for me. I have written a book about this. I did not want to write a trading book for the sake of writing a trading book. There are plenty of trading books in this world, and I don't need to contribute to an overcrowded area. But I didn't see a trading book that was written by a trader that had nothing to do with charts. They're all filled with charts, and they're all after the fact examples of, look how great I am, I'm so short there. But none of them goes to the heart of what it really takes to be a really good trader. None of them truly deals with what it takes to have that consistent mindset. So the reason, I'll tell you what prompted me to start this was I saw one of those fuckers on YouTube standing there, and it was like that guy who goes into a helicopter or whatever he is, or maybe he's off to the spa. I mean, he could be a TUI representative, one of those traveling representatives, evaluating resorts all over the world. I'm just done with the trading, off to the resort or the spa or whatever. But that's not what trading is about. And I hate that trading is being portrayed as a lifestyle. I accept that you only have a certain amount of time. You may not have 12 hours a day like I have, or 15 hours. Even I have time going, hey, go sometimes and smell the roses outside, maybe. But even if you do trade on a part-time basis, don't expect the setup to be ready there for 7 o'clock in the morning. What's your profession? Are you a lifestyle dentist? That's my point, and that's why I wrote this book, because I wanted people to get an insight into what the perfect mindset for trading is. That's why I wanted to buy my book, and there's a bit of marketing, and it's not out until August anyway, and when it does, I'll probably have published it much to the annoyance of the publisher. I have published most of the book on my Telegram channel anyways. Can you stop posting what you're writing? But to me, it's just about, hey, I just have this urge. I want to tell people what really lies behind someone that trades. And it isn't what most people portray it to be. That's my frustration. Okay, I believe that the real secret to trading success is that I know myself, I know what I'm good at, and I know what I'm not good at. And what I'm not good at, I try to make amends on that. I work on my weak sides. Had I not worked on my weak sides, I never would have calmly been able to trade 300 pounds a point. And that's just for beginners. If that was a trending market, I have a screenshot somewhere where you'll see that I am short the FTSE in 2,950 pounds a point. Now, that's every single point is 3,000 pounds. And if I'm not mistaken, I lost 78,000 pounds on that particular screenshot. when I took the screenshot, I was down £11,000. I mean, you think, well, that's a lot of money, but it was only 3 points. Now, you wouldn't sit there going, oh my God, I'm on the wrong side of the line by 3 points, would you? But maybe you would when it was trading that size. I would never have arrived at had I not gone through what I describe in this book. Never. Technical analysis alone means nothing. Do you know who that is? That's David Paul, my friend. You never want to be in the next room to David Paul because he can literally. He worked for the demolition crew. Yeah? Because his mere voice can move walls. It is incredible that he can project. Anyway, this is what I believe is the true key to success. So, I want to prove it to you, and this is where a point where we get a little bit interactive. How are we doing for time? Cool, plenty of time.
3 years.
Yeah, right? 3 years. Okay. So, let's just see what's going on in the market. Oh, look! What is it? Do you remember when we were younger? Man, remember when we were younger? And the girl was actually started talking to us, and we went over to our mate. With a chance there. I'm in there. I mean, I'm not all in yet, but you know, I'm in with a chance. Whoa, big girl. In with a chance. So what do we do now? What is the most logical conclusion to do right now? We're going to check the chart. Stop loss, right? Check the chart. Let's go to the stop loss. Okay. Okay. All right. Looking good. So, why don't we just move the stop loss, and I'll invite you all out for a drink. Can I buy 20 people a... Is it possible to buy 20 people a drink for 192 quid?
Yes.
It's 10 quid each, isn't it? Damn, that might be a meal at a half-decent restaurant. Might be a semi-decent. It is London, probably a cafe. There's 20 meals for a cafe there. But hey, we're going the right way. That means that we managed to make about $1,000 or 1,200 trading night. Do that every single day. Might be in with a chance. Seriously though, I want to tell you a little secret about me. I might stand here being pretty cool. Yeah. Do you think I'm cool? Or do you think, fuck, I hope I don't fuck up in front of 20 people? It's the latter. Or why don't we just call my bluff and say, yeah, I don't really want to. I know what I had to do, but I also know that maybe today it just wasn't my day. It was my day, but it could have gone any other way. Doesn't truly matter, but there's that part of your ego going, if I had lost $5 you're gonna go, I'm not fucking listening to that. I don't need him to tell me how to lose $5 I can do that myself. I don't need him to tell me.
That one shot, but how do you carry on the
Well, that's
information?
yeah.
I see
So, what? Oh, that's the VPN. Sorry. Let's see. Okay, so let's see if I can do this. So I go to basically Trader Tom Team. This is my friend Lennie. He helps. So if I then do this, if I forward it to the IX group, let's see if it works. Do you now get? Have you got that on your phone? Those of you who are participating. That's all right, don't worry about it. It's not critical that we all. I just thought it would be fun. So, the question here is, overall, what was the, hang on, I think we're missing a slight bit of the story here. The story is, do you see that up on the screen now? Context. With me? I haven't lost your attention. You're not yawning now, are you? Well done. Was it it coffee you had in the break? A colleague of mine, haven't actually, I call him a colleague, I never met him, Rodriguez, works for a broker called FXCM. He decided to tap into their database and look at all their traders and find out how many of them were making money and how many of them were losing. Basically, making a catalog over the performance of their clients. Very brave, if you don't mind me saying so. Very honest, very brave. He really kudos for that. They had 25,000 traders that he investigated, and he looked at all their currency trades that amounted to 43 million trades. That's a lot of trades, right? Over a 15-month period. The question you now have to answer is, how many of those 43 million trades were winning trades? Was it 100% winning trades and, 10% winning trades and 90% losing trades and so forth, so sort of segmented? Would you mind answering? Okay, so I obviously know what the answer is, so I'm just gonna wait until you guys have answered. Does it work? Yeah, okay, cool. All right, here goes. Ready? I suspect some of you know the answer. I suspect some of you have studied my notes in the past. Alright, so we got 13% saying it was 10% winning trades. There are some very pessimistic people in this room. And then there is one person that believes, 6% believes that it was 7%. Okay, so far, quite a lot believes that it was 60%, which it actually what happened to be. Now let me just go back, because it does get a bit more interesting here. 2020. Now, when they won, how much did they win? I just have to tell you, this is a bit amateurish, but I couldn't find a better way of doing it. So I created a survey in another channel, and then I'm just following it here. How much did they win on average in pips? So on their winning trades, how much did they win? Did they win on average less than 25 pips, more than 25 pips, but less than 50 pips, or more than 50 pips? Please vote now. Okay, so most of you believe that they made less than 25 pips. Okay, you are not particularly optimistic, are you? Okay, let's go to the more important one, which is how brave do you think I would be if I walked next door and asked David, my friend, he is my really good friend. David, do you think you're not too talented? Do you think he would take the humorous side of it? I don't know.
You should try it.
Yeah, I think I should try, but I want to do this first. How much did they lose on average in pips on their losing trades? Less than 25 pips, more than 25 pips, but less than 50, more than 50, but less than 75, or more than 75? Please vote now. Read it and then vote. What are you deciding on? Alright, have you all voted?
Yeah.
Okay. Peter, are you not part of it? Okay. Right. So, the majority of you believes that it's more than 75 pips. Here comes the answer. Sorry, I kind of lost Here we go. Here's the answer. Now, I know this is a bit of a light moment within this talk, but I think there are some very serious ramifications. If I looked at your track record and your track record and your track record and your track record, I may hit a bubble. But when you investigate 25,000 traders, then all the outliers that may drag it down, they are weighed up by the great majority. And 25,000 people have a 62% hit rate. That is a good hit rate when they win. Hey man, how are you? Good, how are you man? Good. That's a good hit rate. When someone wins 43 pips on 62% of their trades, that's not bad. It's not bad going at all. But here's the real issue. On their losing trades, which account for 38% of all their trades, can we agree that if you had a hit rate of 62 winners and 38 losers, you're not doing too badly? In rounds of trading, you're not doing too shabby, okay? But the problem here is that when they lose 83 pips. So when you count that through, when you articulate that through as a calculation, it essentially argues that you make 2,600 pips, but you lose 3,100 pips, and that's exactly what FXCM discovered. Now, I have a question for you. Do you think that's because they don't understand technical analysis, or they're using the wrong moving average, or that they somehow don't understand Keltner channels, or somehow they're lost on Fibonacci, or volume, and it's because they're using the wrong chart? Or do you think it's because they're not educated enough? No.
Poor money management.
Poor money management, emotional attachment to the outcome, loss aversion, I don't want to take a loss. When you are presented with statistics like this, coupled with everything else that we've been talking about for the last 3 hours, do you know what I'm hoping? Personally?
And nobody is really stupid enough to do it.
No, because I know you are. What I'm hoping is that this is a time for pause and reflection. I'm hoping is that you would stop trading for a while and ask yourself, how am I going to interact with the market in a way that the 10% do? How am I materially going to move myself away from this statistics? Do you remember a couple of hours ago I said that the future is unknown, and then I argued no, it's anything but unknown. It's known. The future is known, because an actuary working for an insurance company can take Marcena here and all her might and beauty and say, how old are you? Do you smoke? And to the month he can pinpoint when you're going to die. It's a bit morbid if you ask me, but nevertheless, such is the strength of an actuary working for an insurance company when they calculate payout and insurance premiums. Well, I tell you this though, if you don't do something material to change the trajectory of your life, you're just going to daddle along the same path that you always have. That, unfortunately, is a fact. That's what I'm hoping. And I didn't need money for this. Simon obviously needed to fund the hiring guest, but I wanted to come here and give a 3-hour thunder speech on just, hey, if you are anything like them, just pause your account for a moment. Take your money out so you're not tempted. Give some serious contemplation. Even if you ask me nicely, I may give you an early draft of my book so that you can actually get to the crux of what really matters. Because truly, honestly, and genuinely from my heart, you're not going to change this. You're not going to change those circumstances through the use of technical analysis. There is no such indicator, nor there ever will be an indicator that will immunize you from that statistics. The only thing that will ever immunize that is through, as Socrates said, know thyself. Although it was Plato that said that about Socrates, who may or may not be a fiction of Plato's imagination. We shall never know. But the whole concept of know yourself essentially goes down to how fucking honest are you with yourself? Are you honest enough to say, yeah, shit, I'm not good at this, but I want to be. That means I need to change the way I interact. I need to change the way I behave. Okay? Now, that leads me on to the second thing. It's a bit late at 2 hours and 45 minutes to tell you what you will learn, but hopefully you have learned a lot anyway. It happens when you are prone to a detour or two. But I actually had a couple more of my own that I wanted And it boils down to this. Would you mind answering this question for me? Can I help you with that? You seem your back struggling a little bit. Do you need to stand up?
Yeah, okay, thanks.
Yeah, you okay? Do you want me to come and click you? You know, sometimes you don't look like a guy that needs a bear hug from me right now. No. Good. Okay. Here's the question. How important is the mental aspect of trading to you? I call it trading psychology, but the essence of it is that you have a game plan beyond just using technical analysis. How important do you feel that is to successful trading? Do you think it's very important? Do you think it's somewhat important? Do you think it matters but not as much as technical analysis? Or do you think that technical analysis is all that matters? Or an alternate answer, they are both very important. Where do you fall on this spectrum? Please answer now. Can I click two? Can I? Well, I'm glad that you can. I'm just showing my promise as an IT engineer. I could know my head from my arse when it comes to IT. Which is lucky for me that I only use a simple chart, huh? What would you answer? And I'll answer on your behalf.
The third one down.
Third one down. It matters, but not as much as technical analysis. Cool. So here we go. 55% of you think it's very important. 44% think that it is both very important. A few of you think that it's probably just you, actually. My quick statistics and everything, probably but there's 18 books and 5%. Yeah, I think we just identify the culprit here. Alright, okay. Now, as they say, now it is time to put the icing on the cake. So now get serious. Are you ready? If you think that trading psychology is so bloody important that you have just said it is, please answer this. How much time do you spend on this mental side of trading? Reviewing your trades, questioning your actions, identifying your weak sides of your trading, overtrading, revenge trading, board trading, as a percentage of the overall time you spend on trading itself. In other words, put in layman's language, no talking right now, just bear with me for a second, okay? Let me get this one across the finish line. If you spend 10 hours a day trading, how many hours of those are you spending truly on reviewing yourself? Is it I spend little or no, be honest, I spend little or no real dedicated time contemplating my thoughts and behavior in my trading? Or I do the occasional review of my trades? Or is it I have a plan in place to review and monitor my performance? Or is it I am consistently reviewing my trades and I spend a significant amount of time on mental preparation? Or is it finally I'm a bloody sage, sitting cross-legged, chanting on side run, waiting for the universe to guide me? The latter one was just my attempt of being slightly funny. Where do you fall in? In other words, honestly, how much time, if you think this is so important, how much time are you actually spending on reviewing your performance and reviewing your behavior? Let's find out. And I take that you've been honest with yourself predominantly. See, my experience is that where most people are. I do the occasional review, okay, you're honest. There's 16 votes, not sure why there was 18 votes before, but hey, someone may have feeling. I spend little or no, so 50% of you, 50%, no actually, yeah, 50% of you do little to no. And another 30% of you, I have a plan, but having a plan is not the same as saying you are doing it. Oh yeah, I have a plan, I have a weight loss plan. It'll kick in next Monday. on tomorrow, bestie. Oh, you. I am surprised that none of you say you're bloody snake. So, what that highlights to me, but perhaps more importantly to yourself, is we say one thing, but we're doing another thing. And very few of us, in this case, only 24%, at least 76%, have no real plan. I could have framed this question differently and say, how many hours a week do you spend? And perhaps that would have been more concise in giving you a picture. And for me, it doesn't really matter how much or how little you do anyway. It makes no difference in my trading life. It makes a difference that I do my work, but I can't do your work for you. I only wanted to illustrate this to you, that if you are so convinced that this is so important, as it says right here, yeah? Most of you saying this is immensely important, yet down here, you see for yourself, well actually, you're letting yourself down. Might be time to change that, don't you think? Maybe it's a leading question, only you can answer that. Did I live up to it? I traded. I gave you an insight into mindset. I showed you what I do. There was no Fibonacci, no Kelvin, no volume, no trend lines, no screen. There was just, and yet somehow, magically, we made 1,200 pounds. Not exactly a barnstormer one morning, but probably one where I could hold my head high and say, yeah, okay, it was what it was. I don't know where we're going to end up. We have a look now. 475.
Can I put a pizza?
I think we're trending towards slightly better than a cafe now. Okay, so we shall close. And with that, we're ending on 93.8 and we started at 92.5. So we made 1,300 pounds.
You should do more of this experiment.
That was not particularly profitable morning for me. But on the other hand, I didn't lose, right? Very good. So, having said that, I think we go through these. I don't think I did this sufficiently, but I can pick it up for you. I got your, if you want to, on the Telegram channel.
Yes.
On time. Yeah. You'll get a sense. These are just some trades I did. It was my way of illustrating what I call the supermarket mentality, ladies and gentlemen. But I don't think it's relevant. I think I'll leave it at this. And then conclude with some wise words. I didn't become good at trading, truly good at trading, until I found a way of dealing with my fear. I don't think that fear is an evil thing. I think fear is, it's good to have a degree of fear. It is what keeps us from running in front of the bus in a busy highway street. It's what keeps us at times vigilant. But there's fear, and then there's fear that stops us from acting in our own best interest. And interacting in the market is a very different beast to the fear that we experience outside. Fear will feel the same, but we need to learn. We need to have a plan for when fear rears its head in trading. The ideal mindset is a mindset that may or may not feel fear, but is still able to act in its own best interest. And that, I don't believe, is something you're going to derive by luck. It requires a dedicated process. And that process is what I have attempted to describe today. It is starting with a brutal honesty about your own shortcomings. What are you good? What are you good at? What are you good at? Where do you trade well? Because I'm sure there's times when you go, damn, I am good. It's like, wow, the money's just rolling in. And then there's times when you go, wow, I lost that quickly. What is the difference between the good days and the bad days? Not in terms of the technical analysis, but in terms of your mindset. Why is it that you often lose so much the day after you made a lot of money? Is it because you're still suffering from the dopamine effect of the win? Do you need to step away? Do you need to be mindful of that? Do you need to learn to practice detachment, meditation, whatever you may call it, so that you are able to perceive the market without any notion of what should happen? Yeah? That's why I argue that that's almost like my motto. I don't think you can trademark that, but I argue you control your mind and then you can control your future. Okay, I think most of you are familiar with my Telegram channel, so I won't pitch that. It leads me just to say, should you require anything from me, I am at your assistance. You can contact me on hello@tradertom.com. That's where I also think it would be a good idea, rather than we start having an open question form now, why don't you contemplate your questions and then email me? And then I will anonymously answer the question for the group to see. Mine is, of course, your needs. I'm not trying to compromise anybody. It's not what it's about. What do you think? What do you think? Are you happy? Are you happy you invested 180 quid? It is a little bit. You know, you did invest the money. It's about your time as well. It's about also me feeling that you got something of value. This is the seminar I would have liked to have heard 20 years ago. 20 years ago, what did I see? I saw Plonker standing on a stage with a chart after the fact telling me that he bought there and then he sold there and he's a fucking genius. What does that help anyone? What helped me is to show you how I did this live. Right here, right now, placing trades, making money or losing money, managing the position, doing the stop loss, arguing why we should take a smaller position here. You know what? We made 500 pounds on that. You know what? That actually meant that we made nearly 20 FTSE points. Not bad. How much did we risk? 10? And then 12. And then we quickly moved our stop loss so we had no risk and we let it ride. That to me is a good trade. I believe it's 1 o'clock.
Did you say that in slides? Can you get hold of it?
Of course you're going to get these slides.
How do we get them?
The way you get them is by contacting via Telegram. See, the gentleman who organizes this event, Simon, he should have sent you an email to say, hey, here's a link so you can sign up for Tom's channel that is just for today. Otherwise, shoot me an email on hello@tradertom.com. And I can either put you on the channel or I can just email you the slides. But of course the slides are yours. They're created for you.
Can you put one on the Telegram group?
Pardon me?
Put one to the Telegram group. The Telegram group we made today.
Yeah, I'll put them up there as well as a file. And you can download it onto your PC, print it out, or look at it in your consent. Thank you for your time. Thank you.